All right.
This meeting is being recorded.
Okay. All right. Okay. So, all right. So, okay. So let's start the class together with you, Menghut. Today we're gonna be starting a new section because we already completed for the controls. So for now, what we're going to do is we're going to be studying how to do the substantive procedure for 4 accounts: non-current assets, inventory, account receivable, and liability. Okay, so that's what we're gonna be doing for this coming two months. All right. Okay, let me share the screen as well so that we're able to do. Give me 1 second. All right. Okay, perfect. So then we can start. Okay. All right. So the screen is a little bit better. All right. Okay. So hide. All right. So I have prepared. So today, Mihot, you will need to have your computer with you because we're gonna be using a case study to do our chapter today. So I posted it's the case study in here. Do you see the screen? Yeah, I think I can see you see the screen. So you need to download it and we'll have to follow it together. And of course, we will have our slides for today as well. Okay. But I think the most important part is to have this case study. All right. Okay, so let's just have a little brief introduction on what we're gonna do in this part of the syllabus. So again, as I mentioned since the beginning, we have a lot of how to say the syllabus. It's kind of your checklist of everything you need to use during the term. And so here we have the syllabus, like everything you need to learn for the FAU exam this term. And in here, they changed the color. So in here, if you actually see, so we did already the purpose and scope of audit and regulatory framework. And then after that, we have completed the chapter 5 and 6, which is the audit planning and risk. And then after that, the last month, we were focusing on the internal control and accounting system. So we did chapter 7, 8, and 9. So we learned different theory and controls, and then we learned about the different cycles, right? Such as the sales cycle, the purchase cycle, the wages, the non-current asset, inventory, and the cash and banks, right? So we did that already. So now we're moving on to section D, which is the audit evidence and procedures. Okay. So in this area, we will also have 4 chapters together. And what we're going to be doing is we're going to analyze for each of these accounts, how are we going to do the audit using substantive procedures. Okay, so today we're going to start with the non-current assets. And after that, we're going to have to do that for 6 classes. And finally, we will have our last section, which is the audit completion. Okay. So that's a little bit about how our class gonna conduct for the next month. So let's start with just a little summary of what we're gonna be doing for the next, mostly the next month together in this. So in here, so the section D that we're studying right now. So the 4 accounts: non-current assets, inventory, account receivable and cash, and liability, right? So for all these accounts, it's very important that you assimilate and you understand the use of assertions, right? For assertions for the balance sheet or for the P&L. Do you guys still remember that? That was like from chapter 5. I remember, since we just got the quiz, you probably still remember it. So we will need to know what are the different assertions in relation to classes of transaction in the P&L or the account balances, and of course for the disclosures. We actually need to understand each of these assertions in order to be able to describe and give example of procedures to use. Like for account receivable, we would need to use external confirmation. For inventory, we need to do a observation of the inventory count. So depending on which account and what are the assertions that we need to cover, we will need to use different type of audit procedures. And we also had to demonstrate the link between what is an audit program and what are the audit objectives. So this is something we're going to be more in detail when we're going to be going through each of these accounts. Okay. An audit program is the plan of how we should audit each of these accounts individually. And today we're going to be explaining the substantive procedures used in auditing each of the following tangible non-current assets. So that is the chapter 12. So I wanted at the beginning, maybe just to make sure that you guys can differentiate between what is a test of control and what is a substantive procedure, right? Both of these are method used by the auditor to do audit, right? What we have learned in chapter 8 and 9, that we have learned how to do the test of control. What is it? Again, these are definitions that you really need to make sure to remember them for exam. It's to obtain audit evidence about the operating effectiveness of control. So test of control is to see if the controls are operating effectively or not in preventing or detecting and correcting material mistakes. So I want to see if the controls of the company are able to detect and correct any material mistake. If their test of control is strong, we can rely on it and reduce the audit testing. So we can reduce the extent of the substantive procedures. Now, if we're not doing any test of control, we will be performing substantive testing. So what is a substantive testing? So a substantive testing are tests to detect material misstatement in the financial statement. So these are all definitions that you must know by heart. And substantive procedure help us to obtain sufficient and appropriate audit evidence to support the financial statement assertion. So in order to obtain like enough audit evidence to provide our audit opinion, we will need to perform more or less lots of substantive procedure to collect these evidence. Okay. And when we talk about substantive procedure, as you may know, there are two types. One is the analytical procedure. We talked about it. Do you remember, Mingfoot, in which area? I mean, which moment do we must use analytical procedures? Planning, testing, completion. Do you remember that? Mm. Do you actually remember, Mingfoot? Yes, very good. Excellent. So it's only during planning and completion that we must. So you have to use per the ISA. But of course, during the testing period, you are allowed to use analytical procedures to collect evidence, right? It's just that it is not by audit law, but you can still use them, all right? But most of the time, in order to get more reliable audit evidence, we will do a lot more tests of details, okay? So what we're going to be focusing on today are the tangible non-current assets, right? So when we talk about fixed asset, there are actually different types. There are the intangible, tangible, and investments. Can you give me any example of intangible fixed assets? For example, goodwill, softwares, those are what we call intangible. So the element that we're gonna keep for more than a year, but you cannot actually touch them, right? And then we have the tangible fixed assets, which are the property, plant and equipment. So buildings, lands, equipments, machinery, computers, cars. So those are what we call tangible assets. And then investment is like when the company have extra cash, like surplus of cash, they may want to put this money into investment, like buying bonds, buying shares of other companies, or putting as a deposit. So the extra cash you can have, you can use it as a long-term investment. Of course, this is not going to be one of your main activity, but it can help you to earn some interest. Okay. And us in FAU, we are only going to focus on the tangible part. Okay. All right. So what we're going to be testing when we're going to be auditing non-current asset is mainly on 3 areas. So we need to make sure that all the non-current assets, we own the item. So there's the ownership, the rights and obligation. We need to inspect all these non-current assets to see if they exist and if their condition are in good, if their value going to be affected or not. And we'll also need to evaluate how is their depreciation calculations. Okay, so those are the main area that an auditor would want to focus on. Okay, all right. So that's a little introduction, and now we may start the case study together. It's a very fun it's actually a very fun case study to do together. So I'm excited to show you. All right. So this case study was prepared by the previous teacher that were here before me. And his name was Yoshi Yasu. I think his name was Yasu. All right. So let's have a look. So here, I'm gonna immediately go to the notes first so that you know what we're doing. So here, what we have here is actually a financial statement. All right. We have the assets, equity, liability, the P&L, the sales, the cost, and the net income. So we have a very simplified financial statement here. And the client name is called FAU and Co. Okay, so the client is FAU. And their closing date is the 31st December 2011. All right. Okay. So FAU is a wholesale company in Phnom Penh, Cambodia, specialized in cell phones. So it's a company that sells cell phones to all these phone shops. Okay. The company grants credit to customers in the normal course of operations. Allowance for doubtful accounts, if any, it's provided based on the review of the outstanding receivables, historical experience, and economic condition. Uncollectible accounts are expensed in the period such amounts are determined. The fixed assets are stated at cost. Depreciation is provided using the straight line method of depreciation over the estimated useful lives of 4 to 10 years. All right, okay. All right, so that's a little bit. So it's a company that sells mobile phone, and we have their financial statement. All right, okay. So, let's see. Menghood, you're following with me? Can you see clearly? I want to ask you if this company is doing well or not. What do you think for this company? Is it doing well? Oh, hi, Sokon. We're doing a case study right now that you need to be able to access it through the classroom, okay? We're on the third page. So if we look at the net income, do you see where's the net income? Here. Let me see. Is it this one or this one? Use a bread. Oh my god, this is so big. Wait, okay. Here. How does it work? Sorry, it's the first time I did this. Okay. Marker pen, straight line marker. Marker pen, and then all right, let me just marker pen. I can do that, and then what is that? Line drop the tool. Okay. All right. So do you guys see the net income here? The company is doing better than the previous year. Okay, very good. Excellent. Last year they were doing 79. Is it 79? What is it? Is in KUSD, so it's $79,000. And this year they're doing they're actually doing 149. So they're actually doing better, right? Okay. All right. So the company is doing good. It's having more more sales. The sales are actually pretty much the same. Oh, okay, they increase a bit and they're able to manage the cost. All right, and then they seem to grow a little bit in assets. They have quite a bit of cash. The company seems to be doing good, as you say, right? Okay, and then what else? Okay. So whenever, as an auditor, we have a financial statement, of course, that's the document we're going to start using with. We have to make sure that the financial statement is reported correctly from the how to say, from the resources. So I would like to maybe write it here so that it's easier for you guys here. Okay. All right. Okay. May I ask you guys, the financial statement, the numbers from the financial statement, where does that come from? The number from the financial statement comes from the trial balance. The trial balance is the list of every single account with their total amount at year end. Okay. And the trial balance comes from the general ledger. The general ledger would list down the different activity per account, and the general ledger comes from the day book, right? If there's any, for example. And the day book comes from the initial document here. For example, if it's a sales, the amount comes from the sales day book, for example. Right now we're not doing the sales, so probably I'm not gonna do that. So today we're gonna talk about non-current assets. So where normally the non-current asset is recorded in a company, what's the document used to record all your non-current assets? Do you guys remember the name of that document? Do you guys know what the name is? We call that the non-current asset register, which will list down all your non-current asset and the calculation of their depreciations. Okay, so that's how it works. So normally we have a register, and from the register we're going to update the general ledger, and from the general ledger we're going to update the trial balance, and from the trial balance we are able to build our financial statement. So as auditor, since we know that the amount in the financial statement comes from the source document, what we need to do is to make sure that the amount is reported correctly from the initial source. So what we're going to do is we're going to go backward and make sure the amount is done correctly. So I'll show you guys how do we do that. All right. Let's see. Okay. All right. So today we're going to be focusing on, since our closing day is 31st December 2011. So, and we're looking at the non-current asset. So the number that we're focusing on is the total non-current asset, which is $313,000. 313,000. We know that the amount from the financial statement comes from the trial balance. So let's see if it's the same amount from the trial balance. So we're gonna go to our page afterwards, and we have the trial balance here, right? So trial balance, as I mentioned, is the list of all the accounts you have and the final ending, the year ending amount for the last 2 years. So here, what we have here is PPE, right? I'll show you guys again. Property, plant and equipment for 313,000. And in my trial balance here, where's my property, plant and equipment? If you see it clearly, we have the motor vehicle, plant, machinery, equipment. That's the initial cost minus the depreciation for motor vehicle, machinery and equipment. Can you guys calculate all that for me? The total of that to me. And let me know if that amount is equal to 313,000. If you guys have a phone or a calculator, can you guys help me calculate for that, please? Mingwood, are you there? I'll wait for your answer, okay? And Sokon, if you're also here with me, let me know. $313,439. All right. So is that amount correctly reported in the financial statement? If we round it to the closest amount, yes, 313 seems to be correct, right? Okay, so normally what we do is we're gonna tick. All right. And after that, we're gonna check if these amounts comes from the trial balance, as we showed here. The trial balance amount comes from the GL. So let's check if this amount matched to the GL. So after that, we have the general ledger. So after that, we have to, I think I don't need that. Let me see. Just 1 second. All right. Just 1 second for me. Just 1 second. Okay. All right. So for the motor vehicle, do we have 116? The plant and machinery, 346,600. And for the equipment, 121,1000. Let me double check. 160, 346,600, 121,100. Yes, it's the same amount. Then for the depreciation, 72333, 181,790, 6138. 72333, 181,790, 6138. All right, okay. So all the amount is properly reported from the GL. All right, excellent. So if we go back to my drawing here, and the amount from GL comes from the non-current asset register, right? That's the source document that the client used to verify their non-current asset. So let's have a look here. So we have the fixed asset register here for FAU. And we're going to be analyzing this document in detail. So what do we have in the register? So usually a normal company should have something similar to that, right? It will have the different categories. So the cars, the plant, machinery, and equipment. So they will have the description, the date of acquisition, what's the cost, how much is it depreciated, what's the net value, how is it funded, when do we sell it, and how much we sell it for. Okay, so that's a very basic fixed asset register. And if you look at the amount here, what we need to do as auditor, we'll need to check if this document here have been prepared properly. So here, the first thing an auditor would actually do would see there are actually some additions, right? 45,000 minus 1,800 would equal to 27,000. The same for different lines. And then 27 plus 14,000 plus 46,767 should equal to 87,667. What we do in audit is if we add together and the amount is correct, we will put like a sum symbol to say, yes, the calculation is correct. Back in the days when we don't have the Excel sheets, we would need to use our calculator and calculate manually. Now it's easy. We just how to say, we select the cells and we look the sum if the sum is okay or not. So nowadays it's much faster and easier to verify if the calculation is correct. So technically we will be checking all the calculation to make sure all the calculation is done correctly. And of course, we also want to know what's the net value. The net value is 313,439. It's the same as we found here, right? 313,439, right? So the amount seems to be adequately reported. Okay, very good. So this is the first thing we need to do. We need to do the addition and subtraction just to make sure calculation is correct. Now, the second thing we would actually do is we're gonna check the depreciation amount, if the depreciation amount is done correctly or not. So we're gonna go and look at the formula, look at the depreciation rate to make sure the depreciation rate is really within the 4 years to 8 years. Was it that? Well, what's the rule? Let me double check again. The fixed asset is useful life of 4 to 10 years, right? We need to make sure that it's 4 to 10 years and it's the straight line method. So we need to make sure that the client is really following their disclosure. We're also gonna calculate each depreciation, make sure the calculation is done correctly, okay? So that's the second thing we do. Then, what we're also gonna do is we're also gonna, in real life, in real audit, we're gonna focus on new purchases of the year. For old purchases, we have already tested them and audited them during the first year of purchase. We already checked the cost, we already checked their existence, everything needed the first time we bought it. Now we only need to depreciate every year, so we're just gonna verify the calculation of those. But for all new purchases of the year, we will need to do additional work. So first of all, I would like to ask you guys, which item here has been purchased during this year? So which one are the new purchases? We bought three new items this year. Would you guys be able to let me know what are the three new items this year? The cutting machine. Yes, very good. The cutting machine. It's bought in 2011. The Exio machine. It's bought in 2011 as well. And the computer. Very good, Minghui. Excellent. All right. Okay, so we bought three new items during the year. So we will need to do extra work on these three items afterwards. Okay. Now, do you guys still remember fixed asset? Is it the assertion for account balances or is it assertions for classes of transaction? When we talk about fixed asset, which type of assertion do we need to focus on? The balance. Very good, Menghui. So in here, for the non-current assets, the assertions that we need to focusing on are the assertions for account balances, which is the balance sheet, right? Can you guys remind me again, what are the assertions for the account balances for the balance sheet? I can give you the first one. There's completeness. What else? Mei Huang and Sokon, you can also help Meng Foot out, okay? What else do we have? We have completeness. Recalculation is it's a audit procedure, Meng Foot. It's not the assertion itself though. I'll give you another one. Existence, rights and obligation. Do you guys remember these? So con, okay, very good. So cut off is an assertion, but it's an assertion not for account balances, it's for the classes of transactions. It's for the P&L. Okay, but very good. That's actually an assertion as well. But it's only for yes, accuracy and valuation and allocation actually. Okay. 1, 2, 3, 4. 1, 2, 3, 4, 5. There's 5 for account balances and 6 for classes of transaction. The fifth one, maybe some of you may forget, is the presentation. So this is for the disclosure, right? Make sure the notes in the financial statement, it's understandable disclosure. Okay. All right. So those are the 5 assertions for the account balances. Quick review. I'm sure you guys tend to forget. So since we are on it here, can we do it here? Yeah, here. What are the assertions for classes of transaction? Since we're at it. P&L. So Sokon, I'm going to take your first one, cut off. Occurrence, excellent. Sokon, any other one as well? Maybe what we performance and recalculation. Those are my audit procedure. All right. Make sure not to confuse. Here we're talking about the assertions. Yes, so presentation. There's two assertions that's the same for any category. It's presentation and completeness. These two are exactly the same. 1, 2, 3, 4, 5, 6. So there's 2 more. Completeness, occurrence, presentation, cutoff. Accuracy, excellent. And the last one, we need to make sure it's recorded in the correct account. It starts with a C. Classification, yes, very good. So these are the 6 assertions for classes of transaction. I have a feeling that you guys are not very comfortable with them. You must absolutely be able to tell me, know by heart, these are the assertions for classes of transactions and know their definitions. The same thing for all the assertions for the account balances, all right? Now, Minghood, since I see there's a little bit of confusion, we're also going to learn about the audit procedure. If I remember well, there's 6 of them. Okay, so here we have observation. Observation, what else? Inspection. Inspection, recalculation. Confirmation. Let me see. External confirmation. So we have observation, inspection, recalculation, confirmation. What else? Analytical procedures. Analytical procedure. Performance. I think that's it, right? 1, 2, 3, 4, 5, 6. Let me double check. Inspection, observation, external confirmation, recalculation, performance, analytical procedure, and inquiry. All right, inquiry. All right. So there's 7 of them. Okay. All right. So do not get confused, Minghuo, all right? So what are here are the different type of audit procedures that the auditor may perform. We can observe, we can do calculation, we can ask questions. Now, assertion is not the same. Assertion is a kind of another tool for the auditor to evaluate if the financial statement is prepared uh, prepared freely out of free of material misstatement to make sure the financial statement is true and fair, right? So just make sure not to confuse these two notions here. Okay, all right, good. So let's go back to our little case study here. All right. How can we check for existence when we talk about the non-current assets? What does existence mean? Do you guys know, like realize? What does existence? Oh, Sophia, also Sophia is here. Hi. Existence means we want to verify that the asset exists. It's not fake. They're not lying. There's really an asset there, right? So what's the best way to do that? If we come back to this. So here we want to check for existence, right? I want to see if all these fixed assets exist or not. What kind of testing you would suggest me to do in order to verify the existence? If the client tells you that they own the Mercedes, they have a Mercedes, what would you do to verify that they're not lying? I think we can go and check. We can inspect, right? Very good. I mean, we can go and inspect and look, observe, right? Observe the see if there's really a Mercedes here, right? So what we're gonna do is we're gonna physically go and inspect all these items. So how many items does the client have here? 1, 2, 3, 4, 5, 6, 7, 8. All right. The client has 8 items. So he said that he has a Lexus. So we go to the client and we see, do we see a Lexus? We do see a Lexus. So the Lexus exists. However, what do we notice with this car here? Is there any problem with this Lexus car? What do you guys feel like? Is the Lexus in good condition? I don't think so, right? The car looks in quite bad shape. So we're just gonna come here and we're gonna just put a little star here and we're gonna come back to say that the Lexus car exists, but we're not sure the condition of it. Second item, they have a Nissan. So we take from the register, there's a Nissan and look, do we have a Nissan? Yeah, we have a Nissan. Very good. All right, it exists. Now the third car is a Mercedes. Let's go see if there's a Mercedes here. Yeah, we have a Mercedes. Very good. All right. And then we have different machine. We have YYY machine, a cutting machine, and an Exio machine. So let's go to the client. So in Will situation, we will be at the client and we'll look. We're gonna go see if these machines exist. So YYY, cutting and Exio. All right, let's see. All right, we see the YYY machine. It's here. We have a cutting machine. So we have a cutting machine here. And we have an Exio machine. We have an Exio machine. Very good. All right. That's good. And then last thing, we have equipments. We have a computer and we have a equipment A here. Okay. So let's go. We have a equipment A. And we have a computer. So very good. We went and verified the 9 items and they all exist. Oh, sorry, 8 items and they all exist. So by doing that, we verify one of the assertions already, which is the existence. So we check the physical existence. Prepared by Janice. So we can say physical inspection. Okay. Now, I put a little star on the car Lexus. Let's see how much is the Lexus car worth based on our books, in our books. It costed 45,000. We bought it last year in 2010. And we depreciated 18,000, nearly 40%. And now the net value is 27,000. By looking at the car in the current condition here, does this car here worth $27,000 for you? No, right? It looks quite in bad shape. I think this car maybe is worth less than that. I don't know. I don't know how I'm not good with car evaluation, but doesn't seem to be very high. Probably less than 10,000. So already here, by physically inspecting the car, not only it can help us to verify existence, but it can also help us to inspect the condition. And the condition will affect the accuracy and valuation of the car, right? Okay. So a physical inspection is actually a very useful audit procedure. It helps us to verify existence. It also helps us to verify the accuracy on some items. Not all, but on some items. It's help us to know that it's not worth the amount. So we now know the 27,000 here, it's not correct. So for this amount, we will need to talk with the client, right? We'll discuss with the client and have a new evaluation on whether the car in this actual state, how much should we register it in our books? So probably the client will need to make some adjustment here. All right, good enough. Now, if we go back to our PowerPoint. So here, we verify existence. Now, let's look at rights and obligation. What does right and obligation means? Do you guys remember what does obligation mean here? Rights and obligation means if the item, the asset here belongs to our client or not. Okay, so rights and obligation is actually the question of ownership. This item belongs to us. And if it's an obligation, do we have this responsibility to pay off this liability? So do we have the rights to the assets? And do we have the obligation to pay for the liability? Now, in this case here, for cars, here, normally, how do we show that these cars belong to us? Do you guys know what document we use to prove that a car belongs to us or not? What do we use here in Cambodia? Any idea? Do you guys know what's the document called? When you get a new car, a new motorcycle, we need to do a registration, right? Yes, a certificate of ownership. Yeah, very good, Meng Hu. We call that a registration, a document of registration, and we would need to do it. I think, is it with the transport here in Cambodia? But we need to get it registered to say that for this plate, this car plate number, it will belong to one person. And also it's easier for the authority anytime later on to trace back to us, right? So we call that, if we go here, we call that a registration document, a Cambodia registration document, all right? So the registration document help us to verify rights of the vehicles. So the ownership. Okay. All right. So we have three cars. We have the Lexus, the Nissan, and the Mercedes. So we look. First, we have the Cambodia registration, and there's a plate number 123 FAU 45, right? So what we would do in real life is that we're gonna go back to the car and we're gonna look at the nameplate if it's the same nameplate, okay? And we're also gonna look if it's the same model. So this should be a Lexus 3 something. We look. It's a Lexus, sorry. It's a Lexus RX 350, all right? It's the same. It's the same plate number. Usually each car also have a VIN number that we can also check. The VIN number is unique to every car to make sure this is the car. And the most important part we're going to look at is the owner. Who owns this Lexus? So the one we have right now is owned, the Lexus is as we see, it's owned by FAU. So so very good. Now we look at the second car. We have a Nissan. So again, we have a Nissan Pathfinder. So that's the car that we saw. And we check the plate number to make sure it's the same plate. And again, we check the owner. It's also from FAU. Then our last car is the Mercedes. So let's have a look. We have a Mercedes car GL450. Is it a GL450, a 4x4? Let's see. Yeah, it's a 4x4 Mercedes. The plate number is 123 FAU 47. And again, it's the same owner. It's all owned by FAU. So here we have demonstrate that these all car belongs to our client FAU. So the rights and obligation assertion is being verified. So rights and obligation here, we verify. Okay. Now, let's look at accuracy and valuation now. Okay. How do you guys like this? Is this fun? When we have a case study so that you actually can visualize a little bit what we're doing in real life. Okay. I think Gig and who else just came? Gig and Supir. This is a case study that we're doing right now. It's in the classroom. Name case study. So if you open the document, you'll be able to find it. Okay, it's a study case, FAU CAMET documentation. All right. This is what we're doing right now. Now, for the accuracy and valuation, one of the things we're going to focus on is we're going to focus on the new item, new purchases that we have committed during the year. And what we're going to verify for these new purchases is we want to know if the initial cost of 25,000, the initial cost of 21,600 for the Exio machine, and the $1,100 for the computer, are these amounts? Remember, accuracy is want to make sure if the amount is done correctly. We want to check if these amounts were recorded correctly. So may I ask you guys, how can I verify if the cost is recorded correctly or not? What kind of proof, what kind of document we should use to verify it? How can I make sure the computer it's bought at $1,100? The Exio machine is at 21,600, and the cutting machine at 25,000. What document should we check to make sure the cost is correct? Excellent, very good. So very good. You guys are actually very good at this. In order to verify the cost, the purchase cost, we need to check for the invoices. We bought these items, right? We bought the cutting machine, we bought the Exio machine, and we bought a computer. So we should have an invoice. We should have a receipt. So we're gonna go ask the client for them. I think it starts with the cutting machine. So let's see. Okay, so we have the computer. All right. So we're gonna verify the accuracy and valuation for the costs by inspecting invoices. Okay? What happened? I don't know what is going on with this. I have a feeling that it's all right. I am sorry. I wrote it and now it's okay. Now okay. Now it's better. All right. So I won't do it again, but you guys understand. All right. So this is the invoice. So let's have a look on this invoice here. The best computer invoice in town. We're gonna look at the invoice date. Yes, it's for 2011. Who is it billed to? It's billed to FAU. All right, billed to our client. And the supplier is the best computer. All right. What did we buy? We bought an Apple Mac Pro 15-inch for $1,100. All right. So is it the same amount that we recorded in our register? Non-current asset register? Yes, it's the same. So very good. We recorded correctly. So now let's look at our second purchases, which is the cutting machine. For the cutting machine, we look at the date. It's 30th June 2012. So here I'm just gonna 2011. All right. So it's bought during the year. It's billed to FAU. And what do we have here? We have the cutting machine FX3 2031 for 2,300. And then installation on 30th June 2011 for $200 for a total of $2,500. Do you guys see any problem here? What's the amount that was recorded in the register? If we go back to the register, for the cutting machine, what do you guys see? Do you guys see any problem? What's the amount that we have for the cutting machine here? Yes, Sophia, it is $25,000. Is this amount correct? No, based on our invoices, the amount should be $2,500, not 25,000. They mistakenly put an extra zero. So that's also another problem that we will need to discuss with the client, right? And we will need to ask the client to adjust. So this is why we need auditors, because we go and check to make sure everything is recorded correctly. So we did for the cutting machines. And now the last one is the weird machine. Again, okay, look at the date. It's 15 October 2011. I'm not going to go back again, but in real life, I will check if the date of the purchases and everything is done correctly as well. So it's billed to FAU, so we bought it. What is it? It's the Exio machine for $20,000, and there's an installation fee of $1,600 for a total of $21,600. Now, I have a question for you guys. The installation were made on 30th September 2011, but the invoice day is the 15th October. Which date should we start depreciating? Should we start recording in our book? The 30th September or the 15th October? Which date should be the correct one? The date of the invoice or the date of the installation? Sophia think is on the 30th September. How about the others? Well, then you just have to think of your and ask yourself, when is the first day we are able to use the machine? When the installation is made, then we're able to use it, right? So right on the day on 30th September, when it's installed, we're able to use it. So we should use this date, okay? And it's 21,600. So let's go back. The XZO machine, the date is 30th September 2011 and 21,600. Very good. So we recorded the XZO machine correctly. Excellent. So very good. And then that's it. So we have also verified the accuracy and valuation. Okay. For allocation, as I mentioned earlier, we will redo the depreciation, right? We will go through each of the depreciation for every single non-current asset accounts. And we're going to check if the calculation is done correctly, if the rates, if the percentage they use is the same as last year, did they use the correct percentage? So we're also going to check that for depreciation. For completeness, for the non-current asset, we can use the non-current asset register to do the completeness. So I'll show you guys when we're gonna do the PowerPoint. I'll show you guys how we can also verify completeness. And for presentation disclosure, we actually have done some of it. For example, we read the disclosure related to the fixed assets. We know it's using the straight line and it's 4 to 10 years. So we have to make sure when the client is doing the depreciation is really following the policy they stated. Hello? Okay. Mommy's working. All right. Okay. Bye-bye. Yes. No, I should. Mommy need to work. Okay. Okay. Bye-bye. All right. You say bye-bye? Bye-bye. All right. Okay.
Yeah.
All right. Sorry. All right. So let's continue. All right. So right now we have verified all the assertions. All right. We verify the existence by doing the inspection of the items itself. We look at the registration document for the ownership of the cars. We look at the invoices for the cost, for the accuracy and valuation. We check the depreciation. We will also check the completeness. I'll show you guys later. And we also check the notes in the financial statement. So we have covered all the assertions for our non-current assets. All right. Now, let's have a look on the controls. All right. We actually done that before for the we have done that for the let me see Do we have we don't have it here. We have done that for the non-current assets. I don't know if you guys remember. So let's have a look. All right, okay. So for the test of controls, if you guys remember, we actually went through some of the control objectives. For example, we need to make sure that as control performed by the management, we need to ensure the non-current assets are secured, properly safeguarded, and properly maintained. All acquisition, all new purchases and disposal have to be properly authorized. We need to ensure that all non-current assets are properly recorded, and we need to ensure that all the depreciation rates are reasonable, right? So those were the objectives we learned about. We'll do this. We'll do the non-current asset after, and when after we talked about that, for all acquisition and and disposal, we want to make sure that they are authorized by management, right? So what does it mean? When we're the auditor, if we want to check if it's properly authorized by management or not as a test of control, how do we do that? Right? The management tells you, the client tells you, we make sure that every time we buy a new non-current asset, so this year we bought 3, the computer, the cutting machine, and the Excel machine, they have been properly authorized by the management. So us as auditor, we're like, okay, you said that you authorize it. Can you give me the proof? So how do we check the authorization? Do you guys have any idea? How can we check as a test of control for the authorization? When a management authorize, what do they do? How do they authorize something? They would sign it, right? They would have a signature to authorize it, right? And if they need something to be authorized, they need to prepare a authorization form, signatures. So we need to check the signature on the authorization form. So that's would be an example of a test of control, and make sure that every time they purchase something, it has been properly authorized by the proper management. So for this purpose, we also prepared for your case study the authorization form. And as the auditor, we need to check it has been properly authorized. So we need to check if they have been signed properly. Okay, so let's have a look. So all that we have done so far, these are substantive procedures. So we are checking the numbers in the financial statement to ensure it's recorded properly, and we need to go through the assertions. But now what we're going to do is a test of control. So we're just going to make sure the control the client says they're doing has been done properly. So here we go. I think you guys can you guys see properly? So this is a non-current asset authorization form. purchase authorization. So we want to ensure that all purchases are properly authorized, right? We want to check if purchases are properly authorized. So how do we do that? All right, so first one we have here, it's the previous teacher did a very funny one here, so it's nice to have something that would be funny here. So it's requested by Picasso. I hope you guys know who is Picasso. So it's signed by him. It's from the IT department, and he wants to buy Apple Mac Pro for US $1,100. All right, the information here seems to be good. From the best computer, and is authorized by the head of department, Claude Monet. It's a French painter. It's also a painter. It's French Monet. So it's signed by him, and it's also authorized by the CFO, Michael Jackson, and also approved by the CEO, Jackie Chan. So here we see that for the computer, it is properly authorized. Each level, it's filled up properly, and each level have given their authorization. Now, the second purchase was the cutting machine. So let's have a look for the cutting machine. We have, it's requested by Agatha Christie. Agatha Christie, it's a book author. So she is very famous of writing solving crime books. I actually love her very much. She's old. She's from the 1920s, 1930s. So it's an old author. So she's not here anymore, but some of her books are real classics, crime solving a book here. And it's requested by the cutting machine. So see, the amount is indeed $2,500. So the 25,000 they recorded was really an error. They found the supplier, and it's authorized by William Shakespeare, which you guys know, it's a very famous British author in the probably 18th centuries. And then approved by the CFO Michael Jackson and CEO Jackie Chan. Now, the last one is the Exio Weird Machine. So it's requested by Justin Bieber from the Weird department with his signature for 21,600, and it's authorized by Mozart, which is a very famous classic pianist, and CFO Michael Jackson and CEO Jackie Chan. So very good. The clients seem to have good procedures. Every time they purchase something, they make sure it's properly authorized first. And that's all. That's the case study that we did today. It's quite fun, right? So we're gonna take a break. When we come back from the break, I'll talk a little bit about the non-current asset here. We'll come back to the little bit about what to do with the non-current asset here, and we'll start with the substantive testing as well in here. All right. Okay. So let's have a 15-minute break. And then when we come back at 7:45, we will continue, okay? 7:45 p.m. back from break. So I hope you guys like the little case study. It helps you guys to visualize a little bit better on how we do that in real life. So I'll see you guys in a little bit. All right, we're back together. Let me see how you guys are. Are you guys back from break as well? All right, so we are back. I just want to make sure you guys are back with me before I start the class. Five. So Minghui, so Khan, so Pierre, Minghuang. Are you guys back? Okay, great. All right. Okay, so Khan is also here. Okay, good. Let's see. Okay, all right. So I'm not sure if Mei Huang it's online as well, and Mei Hut. All right, okay, so we can restart the class. I just wanted to maybe come back quickly on what does a non-current asset register contains. As you may know, in our little example here that we got, it would have different elements, right? The number of assets, the description, the date, the cost, the depreciation, and the net value. So if we look at here, so what we have in the non-current asset, so have the description of asset, the dates, the cost, depreciation, the net value, the net book value, some would call it, a location of the asset, especially if it's very far from each other's. I think we actually mentioned that quickly when we were going through this chapter together. So, as I mentioned, this document is very useful to use for control because it will list down all the assets that you have. And it helps you to have a better control, right? So to exactly know what asset you have, are they in good condition? Are they well maintained? So this list will help you to keep track of them. And very important, this document is very useful to check for existence and for completeness, okay? So how do we check for existence and for completeness? This is what we're gonna be focusing on in here, okay? So for that, I would need to draw, and I think this is Microsoft Notes. Oh no, sorry. Let me just write it down. All right. Okay. So I would like to explain you guys a concept of existence and completeness. Okay. All right. In audit, so that you guys would understand that a little bit better. So how do we do that? What does it mean when we say that it exists? When we say that it exists is that if the client in their book, in the book meaning in their general ledger, in their financial statement, if they say that they have a Mercedes, for example, if in the book they say have a Mercedes of I don't know, have a Mercedes GL 4550. If I want to make sure it exists, if it's in the book, we have a Mercedes, I will go check in reality if we see that car, right? So if we go from the book, so if we go from book to external, so we go from the book to external to the real life, we are checking if the car actually exists or not. We're checking whatever he says he has really exists in real life. So from the book to external, it helps us to verify existence. Now, on the other hand, what does completeness mean? Completeness means everything that should be recorded are recorded. I want to make sure that everything that belongs to our client have all been recorded. They did not forget to record anything. So how do we do that? We will do the opposite. We will go in our reality, in external. Okay, let's say this is a parking lot. And then there's different cars. Let's say there's 2 cars. Probably FAU has 3 cars. So in reality, there's 3 cars. I want to verify if the client have completely recorded their stuff. So I'm gonna randomly pick this one from the parking lot of FAU. What I want here, I want to make sure if everything recorded, right? What I want is I want to verify that everything is recorded. Everything that should be recorded are recorded, right? That should. So I want to make sure everything that should be recorded are recorded. So I'm going to pick any item from the reality. Let's say here, the Mercedes. I see a Mercedes. And I'm going to check if this Mercedes is recorded in my book, meaning is it recorded in my GL and in my financial statement. So if we go from external, if we go from the item itself and we trace it back to my book, to my accounting books, I'm making sure if the thing is recorded or not. So this is to verify completeness. So the direction is very important. If we go from the book here, if we go from the non-current assets and we trace it back to external, we're going from the book and we trace to the real item, we're verifying if it exists or not, right? To make sure the client doesn't lie. Do you guys see the difference? This concept here is going to be important for us also for inventory. You guys understand? So it's very important to when you write the procedure itself, you also have to make sure which direction are you going from? Are you going from the book to the wheel stuff, to the wheel item, or you're going to the item back to the recording books, right? So it doesn't verify the same thing. It's going to be the same concept when we're gonna be doing the inventory, okay? Quickly, I'm gonna quickly go through that. So I asked you guys. Are we gonna do that? No. For inventory, I'm gonna do it again. I don't want to confuse you guys because the term is going to be different. So let's just keep with my non-current assets. So if I go from the non-current asset register, I choose, I see the computer and I go trace the computer to the actual item. Are we verifying existence or are we verifying completeness here? So here, is it existence or completeness? If we existence, very good, right? So whenever we go from book, we go from the accounting book, so the non-current asset register, the GL, the financial statement, the recording items, and we trace it to the external item, it's existence. On the other hand, if we visit the FAU, the client's facility, and we randomly see the XZO machine, and we want to make sure the XZO machine is recorded in the non-current asset register. So we randomly pick the machine and we want to check if it's included and registered, recorded in the register. What are we verifying here? Existence or completeness? Completeness, very good, excellent, okay? So this concept here, important for you guys to understand. So for me, if I simplify, so external item to my books. Books, external item, okay? All right, so very important the way you guys write in your answer as well. Good, all right, I think you guys get that. So by knowing that, let's try to go through the different element here. So we're going to go through the different substantive testing for auditing my non-current assets. So first of all, that's what we did. We took the fixed asset register and we agree. Well, actually did not. We only trace the ending balance, but we should agree the opening balance to prior year, and we should also compare the ending balance of the register to the general ledger. So that's what we did. And then we recast the total in the fixed asset register to ensure the calculation is correct. Recast mean addition, sum. So what do I mean here? This is what we did, right? When we have our case study here, we did the sum, right? Shoot. We did the sum here, right? So the sum here that we do, we call that recast. We add it all together to make sure the calculation is correct. And what is the other thing we did? We make sure the total amount here, the 313,439, the ending balance matches our GL, right? We match, see, we match the GL amount here. Okay, so by doing that, we make sure that my register is properly reported to the financial statement. Okay. And then the next thing to verify completeness is what we just talked about. We select a sample of asset that physically exists, right? So the asset that exists. So we select an asset, physical asset, and we trace them back to the fixed asset register. To ensure that they have all being recorded. So this is the testing that I've talked about to ensure completeness. Okay. Now the second assertion would be existence, so the opposite of completeness. It would be the opposite, right? For existence, we select a sample of fixed asset from the register. So register. So the fixed asset register. And we physically verify that they exist and are in good condition. So we trace to the physical asset. And when we do that, it helps us to verify two things: the existence, and it also helps us to know the condition, right? Remember, the Lexus was poorly damaged. So the only way in order to see if it's damaged or not is really to go and see the car itself. Oh, okay, wait 1 second. I can do that. All right. And then the second thing that we have is, what we can also ask the client if they personally confirm that the company physically inspect all items in the fixed asset register each year. This should actually be a good control, right? If the so I think the second one is not as strong. Then we do ourselves, right? We select a sample from the register and we trace to the real items. But every company should actually go through their fixed asset once a year just to make sure they're still there, they're maintained, they're used. As I mentioned to you guys, at our audit firm, there's some printer that we don't use. There's some broken computers. So anything that we don't use or broken, we should write them off from the registers to keep it updated. Okay. Now, after we learn about the completeness, the occurrence, now let's look at the rights and obligation, right? The ownership, as I mentioned. So for the lands or building that belong to us, what is the document that we use to verify that? I know in Khmer we call that the plong, right? The title deeds, right? So if we need to prove our ownership of land or building, we need to look at the title deeds or the land registry certificate, the certificate of ownerships. If it's for car, we will look for the registration document. That's what we did during the case study, right? And we look if it's under the client's name. For everything else, a computer, a machine, we can actually look at the invoice, right? If the invoice that we got, they're sent to FAU, so it proves that the machine, the computer, all belongs to FAU with the invoice, right? It's a proof of purchase that it belongs to us. If it's something that we use for a longer time, or we don't own the place, but we actually just rent the office, we should have a lease contract to prove that we're not the owner, but we only lease it for X amount of time. Okay. So that's for ownership. Quite easy to understand. Either the title deeds for lands, the registration document for cars, or invoices if we're buying like just normal items. Now, after we did these regular substantive testing, next what we do is we're gonna look at the purchases, the new purchases, so we call that the additions, and disposals. Okay, so for addition, so that's what we have done for FAU. We focus on the new purchases during the year, the cutting machine, ink seal machine, and the computer. So in here, what do we do? What was the first thing we did? We look at the invoice to make sure the cost was correct, right? So we agree the amount in the non-current asset register to the invoice or any other supporting document, right? The computer, it was recorded at $1,100. So we look at the invoice. Did we pay $1,100? The cutting machine, we said it was 25,000, but we know it's actually worth only 2,500. All right. And we need to ensure all addition have been assigned a proper rate of depreciation and recalculate the chart. So since this is the first year we're doing the depreciation, we need to make sure that the rate used is correct. For example, for a computer, we should not depreciate for 10 years. We should depreciate the shortest, probably. So I think for Texas, I forgot, is it 2 or 3 years, I think, for computers. And then we need to recalculate the charge, right? The first year, we did not use the item for the whole year. So do not forget to get prorated, right? Prorated with the number of days. And of course, for all new addition, you want to make sure the client did not lie. They actually bought them. So we need to inspect these new items to make sure they really exist. Okay. So that's all for the addition. So we did that. We did not do for the disposal, but for disposal, it will be not similar, but we need to make sure the disposal have really happened. So how do we do that? Think about it. If you sell something, you're going to get money. How can we check for money? If we receive the money, we would have a receipt. We would have the money transferred to our account, so we can check the payment to the bank statement. And we probably also gave a receipt to the buyer, so we can also check for any supporting documents that we have prepared, like an invoice or receipt of a payment to confirm the price. If we dispose means it doesn't belong to us anymore, so we need to make sure it's properly removed. from the register and the general ledger. And we know whenever we dispose something, we have a gain or loss on disposal, right? So we need to calculate any profit or loss and record this amount in the statement of profit or loss. Okay, we're going to use the net book value and we're going to compare that with our sales price. And finally, one of the last thing we have to do would be the depreciation. So, as I mentioned, I think I showed you 2 times already. We need to check the depreciation policies and rates if they are properly disclosed in the financial statement. So this is for the presentation assertion. All right. We will want to make sure that the rates and policy are done properly. That we follow the rules that we have written. And of course, we need to recalculate, right? We need to recalculate here. We'll check calculation, recalculation is the same thing. We need to check if the charge, the calculation of the depreciation was done correctly. I don't know if for example, for example, if the computer, it's $1,100, we bought it, I forgot, we bought it for 6 months. So multiply by 50%, and each year we depreciate for, I don't know, in 4 years, so 25% each year. So that would probably give me, how much would that be? 100 divided by 4 and divided by 2. So it need to be 137.5, for example. I'm just giving an example here. So what we do as auditor, we need to calculate if the rate is done correctly, if the prorated is done correctly as well. So we're going to check that for all the depreciation. Okay. And a last thing is we need to review the depreciation rate. So I think we mentioned that as well. Normally, we need to be consistent with prior year. So if last year was depreciated for 4 years, this year should also be depreciated for 4 years, unless there's very special justification. All right. And we also need to make sure it follows the policy. For us, it has to be between 4 and 10 years. Okay. It has to be straight line. So those are everything we need for depreciation and for the non-current asset in total. Chapter 12 is one of the easiest one. You don't have much to study beside that. So I think it's a very easy chapter. You just need to memorize and understand it. So do you guys have any questions for the non-current asset here? I think it's quite straightforward. So of course, I prepared some little exercise for us to do. Let's do a little multiple choice question first. All right, so let's have a look. Existence. Which of the following audit procedure is a valid test for the existence of tangible non-current assets? All right, so which one help us to verify existence? So very important. Here we want existence. So don't give me for rights and obligation. Don't give me for valuation, right? All right. Inspecting title deeds of the building. Agreeing figures on the valuation certificate for a building to the general ledger. Agreeing a sample of assets selected by physical inspection back to the non-current asset register. Physically inspecting a sample of assets selected from the non-current asset register. So which one is the correct answer here? A, B, C, or D? What do you guys think? So which one help us to verify existence? Okay, Sokon says D. How about the others? As well? Okay, so let's have a look. So for the first one, inspecting the title deeds of the building, what does that help us to verify? Looking at title deeds is ownership, so it helps us for rights and obligation. Second, agreeing figures on the valuation certificate. Well, already they're talking about valuation, so here it's for accuracy and valuation. The third one, agreeing a sample of assets selected by physical inspection. So we take physical asset and we trace it back to the register. So that helps us to verify completeness, right? Physical to the book. Whereas the last one is physically inspecting a sample of assets selected from the register. So we start with the register and we go inspect the item. So the answer here, Sakon said it correctly, it is D. All right. Very good. Now, let's do another exercise quickly. All right. Test of control. Which of the following audit procedure is a test of controls over non-current assets? All right, so which one is a test of control? Agreeing the totals on the non-current asset register to the general ledger. Inquiring of management the plan for future capital expenditure. Inspecting purchase orders for authorizing signature. Performing a proof in total for depreciation. Which one among these four is a test of control? What do you guys think? What is a test of control again? Does test of control verify any numbers? We're focusing on numbers. No, right? We're only focusing on an action being done. But because we did the case study, which one do you think is the most obvious one that is a test of control? C, we check for authorizing signature. When we're checking signature, we're not looking at any numbers. It's mostly a test of control. So the answer here is definitely C. The first one here, if we're agreeing totals, we're looking at the numbers itself. This is a substantive procedure. Same thing as the last one. Performing a proof in the total for depreciation. So we're recalculating, we're looking at numbers, we're looking at the calculation, the amount. So this is also a substantive procedure. And if we ask about their future plan of expenditure, this is more for subsequent events, which we're going to talk about during the completion stage. And that is also not related to controls. Okay, very good. All right, so today we have prepared, I've prepared 2 questions, and let's see which one we should be able to do together. Should I ask you guys to do that for homework? Let me see, I think maybe we should do that for homework, and we should do this one instead. Okay, let's do that. All right. I think I remember, I think some of the students were complaining that I'm having a lot of homework, but I think it's good for you guys to practice. And after we do this exercise, we'll talk a little bit about our schedule for the next month. And I think I will have time to correct the homework with you together. Okay, so I think it will be good. I think I'll leave that for homework instead. So here. Okay, so we're gonna do this question. It was a real exam questions, I think for 2020, 4 years ago. So we should do that together. Let's see. You recently attended a training workshop on audit evidence. To evaluate how much you have learned from it, your firm's training partner has asked you to deliver a short presentation about various aspects of financial statement assertions. A. Identify and explain 2 financial assertions about transaction and events and related disclosures. With reference to the property, plant, and equipment balance at the period end, describe 1 substantive procedure to obtain assurance about completeness, and describe 2 substantive procedures to obtain assurance about valuation. I would be so happy to get a question like that for exam, because I feel this is quite easy. So question A, let's have a look. I need you to explain 2 financial assertions. So this one is about transactions and events and related disclosure. So this one is about classes of transactions. So it's not about the account balances. So we need to find 2. So here, can we talk about rights and obligation? Could we talk about rights and obligation here? What do you guys think? So PM and Hood? So Con? Here we're talking about transaction and events, right? So we need to use the assertions for P&L. Assertion for P&L only, right? So here, we cannot use rights and obligation. We cannot use existence. We cannot use valuation, for example. So the term has to be correct. So very important, whenever they look at the assertion, you need to know which category are they asking us. There are many of them, right? There's completeness. There's what else? You need to explain too. The cutoff, classification, accuracy, occurrence, right? We can do, what does completeness mean, right? We want to ensure all transaction that should be recorded are properly recorded. So I'm gonna probably because they want you to identify and explain. You want to explain. So there is no missing transaction. Okay. Now cutoff. What is cutoff? All transactions are recorded in the proper period. Shit. Here they ask you for two, so you can wait, stop here, but I'm just gonna do for you so that you guys understand. And you need to practice. You not only need to do for P&L, but also do for account balances, right? All transactions are recorded in the correct account. And accuracy is all transactions are recorded in the correct amount. And occurrence would be all transaction recorded have really occurred. Happened. Not fake. All right. And what's the last one? Presentation. All right. So all disclosure related to the transactions have been properly presented in the notes are clear and understandable and reliable. R. Okay, so something like that, right? So this is how I would have presented. Maybe I would even go a bit further down and be a little bit more detailed, depending how many marks the question is about. But at least I think this would be the minimum. I think this is the minimum you should learn for the assertions, right? It's not a lot, but it's very important. I know they love to ask you about assertion, so that's something that you would need to prepare. Okay. So now after that, let's do the second one with reference to the property, plant, and equipment. Describe one substantive procedure to obtain assurance about completeness. All right, let's do. So what should we write for completeness? And what should we write for valuation? So we need one and we need two for valuation. All right. You guys have any ideas to help me out? If I write inspect, physically inspect non-current asset. Physically inspect non-current assets. If I write it like that, if it's a 2 marks question, how much are you going to give me for this? What do you guys think? Well, are you guys still here with me? Zero, when what says 0.5, I would give a big 0. Because inspecting the non-current asset doesn't help me for completeness, all right? How to make sure completeness is you need to do the whole the whole beginning until the ending. You need to do the whole the full procedure in order to verify completeness. So here, if you physically so this, if you write it like that and it's not clear about the direction of where you do, you're gonna get 0. Because for completeness, you need to be able to to detail what is the direction. So physically, you can say select a physical non-current asset from the client and trace back to the non-current asset register to ensure it is properly recorded. Select the sample of physical non-current asset from the client and trace back to the non-current asset register to ensure it is properly recorded. I would probably even write to ensure for completeness. Okay, so when you write your substantive procedure, you need to detail. So this is one of the weakness I have found. It's that a student tends to write too brief for the substantive procedure. And when you write the substantive procedure, you need to tell me what you do, where you take it from, what document you're tracing it back to, why do you do it? Okay, so you need to detail me what you do, and you need to tell me why you do it and for which assertions. So Minghuo, you understand why the previous answer would have given 0? You need to tell me exactly what you do, what document you use, what you're doing, why you're doing it, which assertion. So if you're able to cover all this in one sentence, you have a higher chance of getting some marks for your substantive procedures. Okay? All right, so that's for completeness. And then now for valuation. Can you guys try with me? Can you give me a procedure for valuation here? What should we do as substantive procedure for valuation? So valuation, remember, valuation is to ensure the amount is done correctly. So I can give you some hint for the amount to calculate. There's the cost and there's the depreciation, right? So what the amount is either the cost of depreciation. So for each of them, can you give me one substantive procedure that we can do here? What should we do for the cost that we did in the case study? In the case study for all new purchases, what did we do? We look at the invoice, right? So some will tell me check invoice. Again, what? How much you gonna give for that? How much would you give this for this? 0. That's good. Check the calculation percent of depreciation against the policy. All right, so Con, that's not bad. That's a big first part, and we can work from it. Okay. So Mingho, do you understand this? I would probably just say 0. So we would say check probably I would do check the purchase invoice for new purchases to verify if the cost is recorded properly in the non-current asset register for valuation assertion. Let me read it again. Check purchase invoice for check the cost, check the purchase cost on the invoice for new addition. On the invoice for new additions during the year to verify if the cost is recorded properly in the non-current asset register for valuation for the assertion for the valuation assertion. All right. All right. So again, I would detail a little bit what I'm doing, what element in. So if you say check invoice, there's many things, right? There's the dates, there's the cost, there's the name of the supplier, there's the name of the purchaser. So there are many things there. So you need to be a little bit more detailed. What are you going to look in the invoice? Right here will be check the total purchase cost on the invoice for example, what we did in the case study for all the new addition, and this is for the valuation assertion. We check the cost with the amount in my register. Okay, so this is the level of detail I want you guys to practice on. Okay. Now, beside that, we should do one on depreciation. So Con already wrote something. We can start from there. Check the calculation percentage of depreciation against the policy. All right. Okay. All right. So let's see. Check the valuation. Here, so Con, what I would have been, so if the question was, I'll explain a little bit what my concern. If the question was, describe 2 substantive procedures about depreciation, for example, about depreciation, then I would use what you write here, check the calculation percentage of depreciation against the policy. What do you want to do here, Sakon? Are you checking to see if the percentage match is consistent with the policy? So you would say, probably here we should say verify that the rate of depreciation used for the non-current, for the fixed asset, is consistent with the depreciation policy. to ensure the client is following the disclosure properly. So here, I would probably think this is more for presentation purposes. So not the rate also related to the valuation, but if it's for me for exam here, I'm not sure it is fully for valuation. It's maybe a bit for presentation, maybe a bit for valuations, both combined. So it's not sure. So in a question like that, if they're asking about valuation, I may not use this one because I'm not fully sure if the corrector is going to consider as a presentation issue or as a valuation issue, because we're talking about rate of depreciation. Something else that I would probably use for valuation, it's about number, it's about the calculation. So here I would probably say we calculate the depreciation charges in the non-current asset register to ensure the calculation is done properly to for the valuation assertion. So here I would say we calculate the depreciation charge fixed asset non-current to ensure the calculation properly for the value. So do you guys understand? So this is how I want you guys to practice to write. It's you need to write the action we're doing. What is it for? To ensure the calculation is done properly. And this is for the valuation assertion. So this is how I would want to do it. If the question was about describe two substantive procedure for depreciation, I would have included these two and it will be totally fine, right? Here, because it's valuation, so I just wanted to explain to Sukon again. I would probably use a more stronger one for valuation here if they're asking about it. Okay. Because here, if we're talking about the policy about in the disclosure, it's I'm not fully sure. However, there's another one here that I would talk about for valuation that we could use is inspect the condition of the fixed asset physically to identify any fixed assets that are damaged or not in use that may be affected that will affect their value in the financial statement for the valuation assertion. Let me say inspect. So I could probably just say physically inspect the condition of the fixed assets to then identify any that are damaged or not in use that will affect their value in the financial statement for the valuation assertion. So that's something I would do. Okay. Is it clear for you guys? Is it okay? All right, so this is how I would have done this question here. I don't think it's very hard, but I think maybe we just need for you guys to practice on how to write. I would actually, for our next class together, would you guys be able to do this homework for me? Then I would be able to help you guys out. I will use maybe 10 minutes of our time at the beginning of the class to look at your answers and see how we should you should write. I think that will be better. So next week we will have class next Tuesday. We'll have class next Tuesday. So very, very easy, all right? 2 controls activity on the disposal of car and 2 substantive procedures on the disposal of car. How should we do that? And I would like you guys to help me write it, okay? Wait. All right, okay. I'm gonna. Okay, so I'm gonna explain you what I want to do. All right, so I'm giving you the example here. Can you guys see? Yeah, okay, all right. So I'm gonna ask you about the disposal of cars. So I gave you an example on what are the substantive procedure on the addition of cars. So for example, verify if the depreciation rate is reasonable. And we calculate the depreciation charge to ensure it is calculated correctly for valuation assertion. Okay. I need to also train my sentences to be better. Trace the purchase amount to the car purchase contract. So we're talking about cars. So it's not an invoice, it's a contract. So trace the purchase amount to the car purchase contract and to the proof of payment example bank of statement to ensure the purchase amount is recorded correctly in the fixed asset register or valuation. For valuation and proof of payment, so we paid it also for occurrence. All right. Verify the existence of the new card by physically inspecting the actual cars. All right, so this one we already talked about. All right, okay. So this is how we should write for the procedures. What I want you to avoid, check depreciation, all right? Trace the invoice for additions, for example. So I need you guys to elaborate a little bit more. So I want you guys to practice on that so that I can see what you guys write and how we should improve it. Okay, so that's what I want to ask you guys for homework. Okay, and then I would like to take a few minutes just to talk a little bit about my plan with you guys for the next month together. Okay, so I prepared that. So whenever you want to know if we have class or not, if you go into your classroom, there's a quick access. We have the study plan. So in the study plan, it has actually our schedule. So you can always come here to look at our schedule. So today we did non-current asset for 3 hours, okay? And then Tuesday next week, for Tuesday next week, we will start another topic about inventory. And I would like to know, because the last few times when I did my physical class, I did not have any student, or I only had 1 student. So my examiner actually suggested me if it's only 1, then you should just do them online. I don't know. Is it actually easier for you guys, and you guys actually prefer to do it online? Whenever we're gonna have class on Tuesday and Thursday, like both days, probably one of them I'm gonna do online. And if there's actually some of you that are actually gonna come to class, then I'll do it physical. Otherwise, I would probably just do it online for it easier for you guys and easier for me as well. You also prefer online? Minghuat is also online. So Khan, I actually see you online as well, right? Recently? Was it online was fine for me. All right, so no problem. Then we can do online classes. I'm actually fine because you guys are all my just regular. So I can change it to online after. And so here. So I can probably do online. Some of them I would probably want to do physical, but I think that for the next 3 we can do online. So what I wanted to tell you guys is that because we only have 1 month left and there's also water festival in between. So in order to finish everything on time, I would like to have class on Tuesday and Thursday. Okay. However, we can do it online, no problem. So next week, Tuesday, we'll do, hopefully if we're able, we'll do 2 hours, and Thursday we'll do the regular 3 hour class. The week after, on Tuesday and Thursday, we'll have two different topic on account receivable, and then we're going to be doing audit completion. All right. So it will be 3 hour each, and then it will be, however, the next 3 weeks, we're going to have to work a bit harder together. We're going to mostly have 3 hours class on Tuesday and Thursday. All right. I would like to have that if possible, if you guys are okay, that we work a bit harder for the next few weeks, because I looked at it and this week is the water festival. So we're not gonna have any classes during this week. And then I would like to finish everything by the 21st November. So I would like to finish everything. And if there are extra times, it helps you guys to have 1 full week to study before the exam, which is on the 4th, I think, on Wednesday or 4th. So you guys have 1 full week beforehand to study. And if you guys have no review class with Udon, I would maybe add an extra review class during this week online as well, that we can practice some exercise together. Okay. So in order for me to do that, I would like to finish all the theory by this week. So that's why we will need to have class on Tuesday and Thursday. If you guys are okay with that, I'll just let you guys know ahead, and it'll probably be a 3 hour class each time. Okay. So thank you very much for you guys to attend. And I'll see you guys next Tuesday. And we're gonna start on inventory. Okay. Please, I only have 3 of you guys, so please try to do the exercise that we have learned today on the substantive procedure. I really want to see how you guys write. So we will start with that on next Tuesday. We'll see your answer and we'll look how we should write on that. Okay. All right. So good night, everyone. Good night. Thank you very much. I'll see you Tuesday next week. Bye-bye.